Hi, I'm Kevin Flanagan, Head of Fixed Income Strategy at Wisdom Tree.
And I'm Jeff Weniger, Head of Equity Strategy. And this is Minds on the Markets, where we go behind the scenes and beyond the trends to explore the forces impacting our markets.
Hey everybody, certainly lots of headlines, lots going on in the markets right now. A lot of volatility, a lot of uncertainty. And it seems as if all of the focus has been based here in the U.S. And, Jeff, I was wondering, and I know that you were wondering, should we be looking somewhere else? Is there somewhere else on the globe where there's some developments occurring that perhaps investors should be paying attention to, specifically in Japan?
That's right. That's what we were writing about this week in the Minds on the Markets, the Japanese wage negotiations that were a March phenomenon. This will be an issue in April, May, June, and so on. Look, the tariff concept is going to dominate headlines for months to come. Everyone knows this, but the reality is that we have some very good news if you're willing to look for it, Kevin, in some of the countries that you would imagine are targets for Trump's ire or trade negotiations. And look, in Japan, the big, well-known springtime wage negotiations came in at a plus 5.5 annual growth rate. That is society-wide wage increases in Japan. It's higher than U.S. wage growth. I don't know that the public truly appreciates. If you look at the Atlanta Fed wage growth tracker here in the United States, plus 4.3% year over year. Average hourly earnings in the United States plus 4.0% year over year. And then here you have Japan, which was supposed to be this deflationary / disinflationary economy, now having wage growth higher than the Americans. It sets up, in my opinion, a Japanese consumer relative to the U.S. consumer macro theme.
Just let's back up for a second. So when you say wage negotiations, what are you talking about, right? I mean, for a lot of American viewers, they're saying wage negotiations. What do you mean? This happens every year? I don't understand.
All right. Yeah, okay. Well, the best way to describe this is the way I typically tell Americans what this means is imagine if Honeywell and GE and 3M every year had to come around with their employees and say, all right, let's sit at the table. How much do you want to have your wages increase this year? Let's negotiate, kind of like labor negotiations or union negotiations. Mm-hmm. And then whatever that number is, if this were to, in this parallel universe, happen in the United States, that would set the groundwork for wages across American society. And that's what the Shunto wage negotiations were in March for Japan. And it came in at plus 5.46% year over year.
Perfecto. So let's go back now. So, I mean, traditionally speaking, most people feel in Japan, it's an exporting country, right? That's where they get their growth from. But you were just talking about it from internal demand, from the consumer side of the equation. What should we be looking at there? And perhaps, in terms of the equity market, obviously the influence there.
Well, sure. I mean, look, the reality is that if you have the reason why a U.S. consumer theory would roll over is that you can't afford a house and then you're getting bitten by inflation with wages not keeping up. In Japan, it may be the opposite at this point. If you do have wages growing 5-6% and you have inflation coming at some number lower than that, and there's no shortage of homes because you have population decline, then you can end up setting up a situation where you get a surprise from this historically, at least in the last 30 years or so, consumer that really couldn't get out of bed and purchase anything. So that's one of the key concepts. With respect to Japanese equities, remember for the last year, they've been sideways to down. The Nikkei was up at 42,000. Now it's in that 35 to 36,000 range. Depending on which index you're looking at, you could be looking at 11 or 12 times forward earnings for Japanese equities. We were doing some stuff on price to book here at Wisdom Tree for Japan. And it's not so much because we're focusing on price to book, but because the corporate governance reform initiative is all about, Kevin, all about price to book. Broad Japan at 1.09 times book, 1.09. The U.S. is at 4.63. U.S. valuations, if you're using that metric, are higher than Japan back in 89 before its bubble ended up imploding. Slightly lower than .com and about the same level as the back end of 2021, right before we had the 2022 bear market. So you're paying about 1/4 the price to book ratio for Japan. So I think it's a valuation setup, especially if this thesis starts to kind of get some attention in the market's eye.
I think that's great. I think we're going to leave it there, Jeff. Obviously trying to bring you ideas and thoughts that perhaps are not always in the headlines. I think that's important. Sometimes we get caught up too much with what's going on a day-to-day basis. So thanks, everybody, for tuning in. And for those of you who have tuned in, if you like what we're talking about here, tell your friends, tell your colleagues, spread the word. Take care, everybody.